You have worked too hard and too long to let your money just sit there without working for you. So when you look at your screen and you finally see that number, $100,000 inside your Wealthsimple account, I want you to take a deep breath. Because hitting $100,000 is a major psychological milestone. But listen to me, what actually happens when you cross that threshold, and what does it mean for your retirement? There is a huge fear out there when people approach retirement. You worry, am I going to run out of money? Am I making the right choices? Can I trust an app to hold my life savings? You have spent 40 years building up your nest egg, and the thought of moving your money or managing it on a digital platform fills you with absolute dread. You fear the unknown. You ask yourself, is my money safe? What am I getting for keeping this much money here? Let's clear the air right now and talk about exactly what happens the moment your balance hits $100,000. The very first thing that happens is a shift in your status. Wealthsimple automatically moves you from their standard core tier up into what they call Wealthsimple Premium status. This isn't just a fancy digital badge to make you feel good. This changes the actual financial math of your accounts, and when you are retired or about to retire, every single decimal point matters. The big question you need to ask is, how does this shift protect your money and grow your income? First, let's look at your fees. If you are using their managed investing portfolios, where they handle the buying and selling for you, your management fee drops from 0.5% down to 0.4%. Now, you might say to me, Susie, it's only a 0.1% difference. Why should I care? I will tell you why you must care. When you have $100,000, that fee drop saves you money every single year. Over a 10, 20, or 30-year retirement, that compounding fee drag can eat thousands of dollars out of your pocket. In retirement, you do not look at expenses in days or weeks, you look at them in decades. You must keep every single penny you can. Second, let's look at your cash. Wealthsimple gives you a massive boost on your checking and savings interest. Your base interest rate automatically jumps to 1.75%. And if you set up your eligible direct deposits, like your pension or your government retirement benefits, that rate can scale even higher up to 2.25%. Think about your traditional brick-and-mortar bank down the street. What are they paying you on your checking account? 0.01%? 0.05%? They are paying you pennies, while inflation eats your purchasing power alive. At 1.75% or 2.25% on a solid cash buffer, your money is actually defending itself against the rising cost of living while staying completely liquid for your day-to-day expenses. But here is where the real value comes in for someone at your stage of life: priority service and specialized human support. One of the greatest fears retirees have about digital platforms is the fear of being left stranded. What if I need my money for an emergency and I can't reach anyone? What if I have a question about my required minimum distributions or my retirement income stream, and I am stuck talking to a computer robot? When you hit premium status, you get priority phone and email support. You get routed directly to specialized human agents who can handle complex requests quickly. You are no longer just a number in a digital line. You have earned the right to have a real person answer your questions when you need them. You also unlock advanced tax efficiency tools like tax loss harvesting. If you have money in taxable accounts outside of your registered retirement plans, Wealthsimple can automatically offset your capital gains by selling underperforming assets at a loss, lowering your tax bill. When you are living on a fixed income, minimizing your tax burden is just as important as maximizing your investment returns. It is not just about what you make, it is about what you keep. Now, let's address the elephant in the room. The fear that keeps you awake at night. Is it safe? You need to know that Wealthsimple is not some fly-by-night operation. Your investment accounts are protected by the Canadian Investor Protection Fund, or CIPF, within specified limits if the institution were ever to fail. Your cash accounts are protected through partner institutions by the Canada Deposit Insurance Corporation, or CDIC, for up to $100,000 per category. Your money is secured by the exact same regulatory safety nets that protect the biggest banks in Canada. So what is your actionable takeaway today? If you are approaching retirement and you have assets scattered across 3 or 4 different traditional banks earning next to nothing, it is time to consolidate. Do not let fear keep you paralyzed in accounts that are losing value to inflation and charging you high mutual fund fees. Check your asset balances. If you can combine your registered retirement accounts, your tax-free savings accounts, and your cash to cross that $100,000 mark, do it. Log into the platform, initiate the transfer safely, and unlock the lower fees, the higher interest, and the priority human support that you need to navigate your retirement years with absolute security and peace of mind. You have earned this milestone. Now make sure you are getting every single benefit that comes with it.